You're always thinking about diversification for client portfolios, but have you ever thought of investing in Israeli companies? It's not as hard as you might think, and some of these companies can offer good diversification and non-correlation to other asset classes. Stephen A. Schoenfeld from BlueStar Indexes is going to join us today to tell us how to invest in these companies through ETFs. Welcome back to ETF Exchange. Stephen, thanks for joining us today.
Pleasure to be here, Greg.
So first of all, I wanted to ask you if you can tell us a little bit about investing in Israeli companies and how that all works. What are we talking about when we think about investing in Israeli companies?
So the Israeli economy is quite diversified. Israel's a small country, just 8 million people, but it has all the major sectors you would expect in a developed market. And it particularly has a very robust technology sector. And the companies, because Israel's so global, are listed in Israel, in London, in New York, and even in Singapore. So even the listings of Israeli companies are global. So for a small market, it's actually quite dynamic and quite complex.
And given that the companies are listed in so many different places, as you say, is it considered a developed market, an emerging market? And how should advisors categorize or think of categorizing these investments?
So Israel was an emerging market, and it was one of the first countries to graduate from emerging to developed and stay there. Greece had graduated and was then demoted.
Right.
Israel graduated in the FTSE benchmarks in 2009, in the MSCI benchmarks in 2010, and it also joined OECD, which is the developed market club, so to speak, in 2010. And so Israel sits in the developed market benchmarks. However, most of the benchmarks that advisors use have a very small percentage of Israel because the standard indexes such as FTSE and MSCI only include Israeli companies listed in Tel Aviv. So about half of Israel's market cap, and in some ways some of the most interesting companies, are missing from the benchmarks that most advisors use.
Okay. And when we think about, again, the fact that companies are listed in New York, London, Tel Aviv, one of the big issues for advisors is getting investments that are not correlated to everything else, so that when one thing is going down, not everything is going down. How should they think about these types of investments as far as correlation goes? I mean, if the stocks are listed in New York, does that mean they sort of go down when the New York market goes down?
So Israel, in many ways, is the best of both worlds. It's got developed market regulations, companies that operate in developed markets, but it has the growth of an emerging market, and it has exposure to the growth of emerging markets because so many Israeli companies are doing business around the world. The correlations, it depends really on the sector. So the tech component of Israel tends to be heavily correlated to tech in the US or tech in Europe. The industrials, chemicals, for example, is more correlated with the big chemical companies. But then there's a good part of Israel's economy that is domestic. The banks, the supermarkets, the retail stores, the hotels, those are more of a domestic play. Those can be more affected by the geopolitical environment of Israel, whereas the global companies tend to be immune. Despite all the rough headlines you hear out of the Middle East, every day, every week, those global companies are barely affected. So it's actually quite diversified, and then historically, what the Israeli benchmarks show is that you get slightly higher returns than both developed and emerging markets, and lower risk. So Israel is a good diversifier for advisors, and it's quite underweight in most advisors' clients' portfolios. So it's worth considering to make a strategic overweight to correct this underweight.
Right. So let's get down to brass tacks. So when an advisor is thinking about, this is an area that can give me some extra return potential, that's not correlated, it's got growth potential as well, how do they do that? ETFs, mutual funds, what are their options?
So there aren't that many funds for Israel. There's less than half a dozen. There are 2 ETFs for Israel. What I would recommend to advisors is you want to get an ETF whose benchmark is as broad and deep and complete as possible. If you're going to go to the trouble of adding Israel to your portfolio, you want to make sure you get all of Israel. And so the ISRA ETF, which tracks the BlueStar Israel Global Index, which we calculate, includes Israeli companies, whether they're listed in Tel Aviv, NASDAQ, NYSE, London. There's even one company listed on the Singapore exchange. That's how global these are. And so a good place to start is a benchmark that includes it all. You also get the benefit of more diversification.
Now, their ETFs have been in the news lately for some perhaps not so good reasons. The volatility issue, and the market was spiking, and there was a disconnect between the price of the ETF and the underlying. Is that an issue, and the liquidity question as well? When advisors are looking at these two ETFs, Stephen, is that something that they need to keep in mind, and how does that factor into their discussion?
So most advisors know that they should probably use limit orders, and what we had on August 24th reinforces that. But the underlying stocks in the Israel ETFs are quite liquid, and so there is a robust market. If an advisor wants to put a substantial amount in, they can go to an ETF desk. What's very interesting about the ISRA ETF is it has these stocks from all over. About a third of the stocks are primary listed in the US, so you don't have the same issue of a dead quote that you might have of a stock that's listed in Israel. So during US hours, you can get a quote. I and many others advise a limit order to attenuate some of those issues. But the other really interesting thing is that the time zone is bridged. So you now are having a sort of continuous market from the Tel Aviv open until the US close, and the Israeli market is looking at the US ETFs as a price signal, the same way the Asian markets will look at the Japan ETF for a price signal.
Right.
So you're seeing an integration of the markets.
Very interesting. Great, excellent. Well, thanks so much for coming by and talking to us about this.
My pleasure. Thank you.